investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Wednesday, October the 27th. The Dow is up 45 points at 35,801. I should have typed this in a little earlier. 3589.92, 35, let me just put that in now, 3589.2. All right, so it's got a little way to go to get to a new all-time high. This is a peak D in the Chapman wave methodology. Let me go through this because this is such an important period. In the Chapman wave methodology, we try to identify the lowest low bar and then merely count each successively higher peak. After that, oops, can I cancel? Listen to these things. They are. From that point, we count each successively higher peak, alphabetize them sequentially, A, B, C, D, E, F, G. It's at that fourth highest peak, peak D, that other things can happen at the same time. You can go higher, but at D, you kind of get cautious. And we've been long the Dow in a shorter-term position. We've got a long-term position with the shorter term since about 35,000. And we're looking at this and saying, oh, we're taking a little bit off. What do we do next? Do we go short? Do we stay long? Is it going to be a Chapman wave instant restart? All sorts of things. But in the meantime, back at the ranch, look at this. The S&P, no matter how I counted, the SPY and the S&P have made a peak C. It seems to me that there's a really good chance that maybe what we're looking at here is that the S&P suddenly spikes and it pops up to a higher high into maybe just under 4,600, 4590. Was it 92? I just can't remember exactly. 4598.53 was the high of yesterday. 4598 point. What did I say? 73, 53. Anyway, I'll put 73 for now. That was the high yesterday. And we've got to go 53. That's what it was. 53, and we've got to go to 0.54 to extend leg C, or else you get yourself a peak D. And now, what does that all mean? That means that within the context of the patterns that we look for, you've got the cup pattern. We've gone three sessions above. This could be the fourth, above the 45.85 previous all-time high of the 2nd of September. And now what we're looking at is it could be a leg E in the weekly chart. A lot of things are going on here. The technicals are really strong. Only the on-balance volume is overbought. So we're going to be following this very closely. I suspect there's going to be a little pop-up there. And then we could start by early next week. We could start to have a little bit of a digestive phase. We're going to be monitoring this really closely. In the meantime, back in the ranch, the QQQs are doing the same thing. Look at this. A leg C could be a peak C today because we're at 379.89. We made an all-time high of 382.78 on the 7th of September. Came down very sharply. And then what happened was, what happened here? Oh. And then what we're looking at is, yesterday went to 382.71, 8 cents from making a new all-time high. And now we're down from the high of the day, and we had 379.99, up 90 cents. This is going to be really a fascinating session because the IWM, the Russell 2000, is showing quite a bit of a dip after a peak E turnaround. Remember D and E, that's where we start to see markets pull back, and that's where you can have the instant restart. But in this particular case, because the low today is 225.77, and the low after peak D was 225.69, we're just in the running here. Oh, wait, that looks to me 69 and looks like it was lower. 77. 78 here and 77 there. Yeah, it hasn't done it. So this could be an instant restart, but if it takes out that left side low below the 69 level, that's going to be a problem. Okay, so now let's go on. We want to go to crude oil. Let's go to gold first. Gold is trading at 1790.5, down just about 3 points, is stuck in this range after the peak D. Remember, peak D is where you can see a bit of a rest, and that's exactly what's happening here. It's holding the 9 and 14 period moving averages. The MACD is good. Stochastics pulled back under 80% to 74%. On balance volume has given that little dip that it had from the overbought area. And the weekly chart shows the falling axe formation. These rising lows and much higher highs, and then it turns around and takes that out. It's called Chapman falling axe formation. This is the inverse one, and it's still underneath there. It's just in a sideways consolidation. SI, that's the silver. Silver is trading at 18 cents down at 24.065. This is going to be very interesting because this also made a peak D. It's stalled at the 200 period exponential moving average. That's at 24.67 of the continuous contract. That can become a magnet or a repellent zone. Right now it looks like a repellent zone. So the closer it gets to 24, say 38, 24.42, the stronger it'll become a magnet again and drag that price up. At this point, it's repelling it. Watching that closely, high-grade copper pull back sharply overnight, still down 0.07 at 4.41. We've got a peak D there, an alternate count. I have to call that now a peak D in the crude oil. That's a pretty sharp pullback. And the cup formation in the weekly charts is stuck in a range. No problem, it's just stuck in a range. And now we're going to go to crude oil. I want to spend a little time on crude oil, and I had said that I'll be showing you 120-minute charts. It's only down 54 cents at 84.12. This is, on each of these pullbacks, we've had 2-3 days of consolidation, and then it breaks to a new recovery high. In this particular instance, you've seen it over the last 3 weeks, how it goes into the Chapman wave inside track repellent zone and then pulls back. So the technicals are saying that the MACD is just really close at 0.08 on the histogram, the plus side. It's really close to pulling back, but even if it flattens out, that'll be a positive. Look at the stochastic at 88%. That's still very good, over 80%. On balance volume is a tad overbought. So we're watching this very closely. Subscribers know we've planned position on this, and we'll see exactly what happens. Look at this doji candle in the weekly chart. Little doji candle in an alternate counter, calling it a D for now. It could be a D/B. Technicals are still really strong. Nothing negative at this point other than the candle itself based on the Chapman methodology. And in the methodology, we've got the potential for a double top. That was at the 85. I thought I typed it in. I don't usually like on continuous contracts to type in the price because it gets smoothed out and that price disappears because it gets modified. The patterns, the wave count, nothing changes other than the price, 85.65. We made a high, 3 days ago at, I think it was just on 85.5, 85.41. So isn't that interesting? Potential double top here. We'll see. This is a very important moment. But of course, if it's oil, then you have to have you've got the geopolitical side of it as well, besides just the purely practical side. And nothing yet has been stated to say, whoops, we're going to have a little bout of crude oil coming on the market. Not at this point. We're watching this real closely. Our close below, I said to subscribers, a close below 83. Let's make it 82.90. A close below that says, this time there could be a little bit of a deeper pullback. And if it breaks out, the 86 is very strong resistance. Basil Chapman does up 42, S&P's up 2.5. We'll be right back. Got a ton of questions. I hope I can get to them all. We'll be back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, I just want to show you in the 10-minute chart of the E-mini, you made a peak E at right there at 310. This is the S&P. 310 this morning on yesterday, 27th. At 45.76.25, and then it pulled back quite sharply. It ran down to 45.56, and then it ran up peak A, peak B, peak C, and a leg D, and now it's just in a process of possibly making a peak D with a high today of 45.76.75, trading at 45.65, only 10 points down. But this is what I've been looking at, where I think we start to get quite choppy. Intraday, there are buyers, and as the buyers see that markets start to pull back, that's when they might get a little bit nervous and say, okay, maybe there could be a little bit more selling. We don't know yet. I'm just saying this is what we're looking at. We have got a peak D in the 10-minute chart. I just wanted to show you something very interesting. The crude oil and the grains themselves, we do have the DBA, which is the DB Agriculture Fund. Got it from the 13s. It's trading in the 19s right now. I had it quite a while, actually. But look at this. Wheat, dust wheat, is trading and made a peak D doji candle. It's pulled back for 2 days. It's a nice green candle so far today. The MACD and stochastic are pretty good. 9-period moving average is over the 14. The price is over there. So that's a good sign. And it's saying in the weekly chart that lately we're making higher highs and higher lows, but there's a lot of work to be done. You want to see it 758 right now. You want to see 769 to 772 to say, aha, I'm going towards the upper part of the band to make a second cup formation, and that's going to be very important. In the continuous contract of soybeans, you're looking at it didn't look too great yesterday. Now is a good green candle, third green candle. Day's young, but this could start leg B to the upside, and that'll help the weekly chart because at 1258, up 10.5, it absolutely needs to, in the next week, it needs to touch 1284, the 12-period exponential moving average. That'll help it get to the above the pink 9-period moving average in the weekly chart, and 1288 is the weekly chart, 14-period moving average. Tremendous resistance at some point in November. You want to see that higher. If you want to see soybeans after that massive single leg to the upside, leg A going from about the 750s all the way to the 1600s and now down to 1258. You want to see something really spectacular happen there. And corn, as we say in the Boston area, really good move today. Corn today is traveling in leg D. Yes, it's a gray leg A there. Why? Because it was underneath the previous peak C, and you call it gray until it goes above there. If it goes above there, even though this would be technically new leg B, it's old leg C, peak C, and this becomes all of a sudden a D. It's a real simple technique. You're replacing one, you're giving it preference just for the moment, and then you're replacing it because that's the order of the sequence of the Chapman methodology. So this, in fact, here is new leg D, very strong move in leg D because you've taken so much time. This could recycle and go to E and an F. But the weekly chart says stuck in a range, but it's a big range. And at 553, up 9.5, this is really good action, but you really want to see the 568, 573 area, and pretty soon. All right, and then you're looking at, I want you to do this. Okay, so I'm going to do this. I'd said I'd do it yesterday. I didn't do it. I'm going to do it today. I had a number of questions about this. Why didn't you finish? I didn't have a chance. So look at this. Let's go to the, did I do the Dow here? No, I didn't. I got the S&P, I believe. I'll get back to the Dow in a minute. Yeah, this is the S&P. So that was a D yesterday, with a potential Chapman wave instant restart. Sorry, that was on the 20th. And then what happens is it goes peak A. I'd like to do this live to show people who use this methodology. A, B, C, D, and there you're at peak E. In the S&P 120-minute chart saying, it's about to bump into some kind of resistance. What would I do? How would I draw trend lines in? I want to do this all live. I'd promise people that, you know what, I do this so often, so many times. I want to show you what I do so that you have a sense. Okay. So you see this trend line right here. And you see this trend line right here. I'm not a big fan of rising wedges because sometimes it goes out underneath or above just because of time. But in this particular case, it is a peak E in the 120-minute chart. And as a result, I have to lift this up a little bit. Okay. And as a result, we got to look at the MACD turning down a little bit. Stochastic's now under 80% to 74%. The 9 is still way above the 14-period moving average. That's good. So we're going to be watching this very closely. That's the S&P 120-minute chart. Did I do the YM? No, I didn't. I did the Dow. Let me just go to this chart that I show subscribers every single day. This is my 120-minute chart that I show subscribers. Yes, I did send out my newsletter very early this morning because all night we had this incredible, these wind gusts of maybe 60, 70 miles an hour. And just, I thought, wow, I still saw the light on in my study that has my computers. I leave them on at night. And I had saved everything, making sure that if it did get shut down, at least I'd saved what I want to do. And everything was working just fine. I thought, you know what, 5:30 this morning, I'm getting up, I'm out of here, I'm getting my work done, I'm sending it off. It's really important to get it done. And that's what I did. And look, the 120-minute chart had made a peak E. Now, we are long. And this is exactly where the reason why we took a little bit off. This is exactly where we start to become a little bit cautious. But I didn't have any real signals, and I've got that sign that says the S&P should still make one. If it makes a peak C today, it still should make another high into tomorrow or Friday or Monday. So that says that it should drag the Dow up, and that's where I'll make a decision whether we go short or whether we just take profits and we keep a position in the diamonds. I don't know yet, but this is a peak E in the 120-minute chart. Look at, I've got to go to a different place. So look at here, we're going back to this. Look at the QQQ, 1, 2, 3. So I didn't finish this because I was going to talk about it and do it live yesterday. I was sure I did the NQs. There it is. So peak D, peak E, right here. Peak E, wait a minute. Right, so that's underneath the previous high. That is a peak F right there. So I usually put a down arrow if the technicals are fading. Some of the technicals were fading. And then out of the blue, there's this turnaround and it goes peak A, peak B, peak C. Now there's no H. So this went underneath the previous top over there. So you can continue this because there's your starting point, peak A, B, C, D, E, and, I forgot the E. Doing this live, I forgot the E. Sorry about that. So that's good. So this is an E, and there was a pullback. So this could be alternate count F/C. I wanted to show this because very often the whole thing about this is that in the Chapman wave methodology, certainly you've got to look at characteristics that repeat. And a characteristic that's repeated a lot over the last year is that when it gets to G/C in a kind of a cup formation, so often it then goes to the D, and that's where it turns down. So that's exactly what we're looking at here. I'll do this just a tad slower in a moment. A tad slower in a moment, so we can do this live for those of you who use the Chapman wave methodology, and I'll expand it so you can see it better.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, so we're back. So I did have the NQ all notated. The daily chart is in leg C, possibly at the NDX 100. This is a continuous contract. Why? Because I can get that monthly long term. I can't get it when I just go to the December futures. So I love to do this. And the price most of the time is exact. And as you get closer to the end of the month, so the third week of the month, where if it's a third month, it'll be starting to change. That's where you'll start to see some kind of a discrepancy between the current continuous contract and the actual month that you're looking at, like December. So in the meantime, I'm looking at this at 15,611. It made a peak D. It did pull back quite sharply. It did drop below the 9 and 14 period moving average. Technically, I do have to go to a down arrow. But at the same time, what we're looking at is there's this cup formation within the rectangle. And that says right there, right? So what we're looking at is a rectangle, and it made a little mini peak A, peak B. This is leg C. And we're also looking at it stuck in a range. And a rectangle formation can last a lot longer than your patience. My suspicion is that at some point in the next day or two, there's going to be a sudden spike. You will get that leg. When you're going to all-time highs, it's really unusual to negate everything by fading at a peak C minus or a B. Well, yep, that's right. But in the meantime, back at the ranch, that is a B right there. So this is a peak C. It'll take a move in the continuous contract above 15,701, 00, round number, to start that leg D. You could get a double top by fading just under it, but I haven't got that signal just yet. So I'm suspecting that we're getting really close to at least the chance of some kind of a pullback. And within that context, what I am looking for is some kind of sign to say that there might be a little mini double top. We haven't got it yet. The technicals are still pretty good. So I wanted to show you also the gold in a 120-minute chart. Look, it made a peak right here. This is something that Chapman subscribers know all about. Sometimes you make a peak C1, C2 because all the technicals looked like it should have gone that fraction above to make a leg D. It failed there, but everything said count that as a peak C1, and the C2 or even the C3 acts very much like a D, and be careful, there could be a pullback. Wow, there was a pullback going from the 1810-ish area down to about in the 1780s, and now we're struggling. It's down just 2, but it's stuck in a second rectangle formation. So I'm saying that gold is consolidating sideways, hasn't broken down yet. It will if it goes to the 1775, closes under 1775 or lower. That's going to be something to monitor. But here's the count from the starting point back at about noonish on the 18th of October at 8 o'clock in the morning, gone peak A, peak B, peak C, pulls back to the 200 period moving average because that's your magnet line, and then it propels away from it, goes to a peak D and a peak E, doji candle, pulls back, goes under the 14 period moving average, starts a little mini peak A, peak B, gray peak A, gray peak B, and then an alternate count F because you pick up the previous peak E. In the alternate count, F/C, and then what happens? That bar that goes to leg F plummets down. So even if it was a C, that would become a C minus because it would have failed, although it hadn't really taken out the low, the starting point. And then it has an inside peak A, peak B, peak C1, C2. And that confirms that that is some kind of a shorter term in the 120-minute chart, pulls back, holds the base, and that base is going to be so important because you're looking at if there is a close, first of all, below 1783, 1780 is the 200 period moving average. So you've got tremendous support in that area, but you've got to be prepared that that could happen. Meantime, it's stuck in a rectangle formation, and a rectangle formation can last a lot longer than your patience. Let's go to the RTY. I think I did that as well. No, it didn't. I just drew the channels. Look how important. I didn't even have to know what this was. I draw the upper wicks. I join them. If I have to go through a candle, that's fine, but I want the most number of hits. That creates a trend line. You can make a channel line by just clicking on the parallel or drawing the parallel 3/16 or 1/8 of an inch below that, and that gives you your repellent zone. Was it a repellent zone? You bet. Look at the RTY. This is the Russell 2000 continuous contract. And what does it do? It goes, I drew this as a parallel to so many upper rising diagonal trend lines. It made this really important. So I took it from that low there, around about the 17th or 18th of October, and that took the line, which was in the RTY, at about 10 o'clock on the 18th at 2,247.70. And look what happened. That particular green line was pierced, but then you created a whole bunch of lines. So I took those lines. It was parallel. It was perfect. Once it broke under it, That's fine. And then all of a sudden you got this cluster here, and it failed. And look how weak it is, going towards the 200-period moving average of 2266. So this is the RTY trading at 2270, down 23. Next thing we want to look at here. What did I do? Crude oil. I did crude oil, right? So crude oil is stuck in a range. It made a peak E top. Yes, look at this beautiful channel. I mean, this is a work of art. You couldn't imagine this. Look at that. From this peak E that was made at 8 o'clock in the morning on the 11th of October, look at this beautiful trend line. It went above it a couple of times, but the pink Chapman wave inside track repellent zone at peak F, it pulled back. At this peak A, it pulled back, and then it did it again and ran all the way up to an E and pulled back. And now it's having an arch pattern, failure pattern. I'm suspecting that crude oil, unless it's something that is announced to do with some kind of a shortage, so that all of a sudden you've got demand really increasing tremendously with lack of supply. That's really what you're talking about. This could trade sideways for a little while, but I can just tell you that if it starts to close, I'm going to make it a little different. Before I'd said under 83, and then I said under 82.80. I think if it closes at some point, you have to have a close underneath this trend line right here. So it would have to be under 82. That's $1.70 from where we are. That's a big deal. So give it until Monday. If at any point until Monday it holds in the sideways range, it can continue for a little while. If it breaks to a new high, I just have to count the waveform. But if it starts to crude oil starts to pull back underneath 82, I think we've finally seen at least a short-term meeting, not just a day or two or three, but you're looking at maybe a week of consolidation. Crude oil, the demand, I must say, in terms of looking at, let me just go there, looking at prices themselves, it seems to me that that uptrend is still intact until you start to see a real good close under the 82 level. Then 81.73 is the 14-period exponential moving average daily support, and then you get the weekly trend line. It's just a lot to ask. So we go step by step. 81 is the key support. All we're looking at is in crude oil that is starting to show lack of follow-through strength to make a new high just for 2 days. But the 3 days ago, it bumped right into the green Chapman wave inside track repellent zone breakout level, couldn't take it, came back in, and now we're watching this really, really, really closely. Let's just do the VIX before we go to the break. I got a bunch of questions I can see coming in. I haven't looked at platinum. Good point. I will look at platinum. VIX is trading at 16.06. I want to talk about the VIX. We'll do that when I get back. Let's see. Platinum.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're back. I just want to show you platinum again. PL, it's platinum in the continuous contract. There's that peak D at the 200 period moving average, and now it's underneath. It's down at 1,017, down 15, and the MACD is just about across negative. Stochastics under 80%. On balance volumes pulled back, but the 9 is still over the 14, but turning down. And it's a leg A in the weekly chart. You're going to have to see if this can hold. But at this point, it's just a consolidation after peak D. Talking about peak Ds, I had a question in the den about Snap. Snap, look at this peak D in the daily chart. It goes to peak F on the 10th of August at 80.85, and that was around about 81. 80.85 on the 10th of August. It plunges down to the 70 level, has a big bounce, goes peak A, peak B, peak C, makes this beautiful arch formation, the dreaded H, but a successful one, and then turns around and forms, it changes, morphs, in fact, from the H pattern to the big cup formation, screams up to a peak D, makes a high at 83, add a leg D, and then a peak D, and look at this pullback. It goes from 84 to today's low of 52. Is that a peak D with a dreaded H pattern? Wow. Peak F in the weekly chart, leg F in the monthly. I take this kind of seriously, at least for now. This is one of the biggest monthly chart pullbacks we've seen in a favored stock, and now it's not a favorite anymore. So you got to be real careful. Now, there are a couple of things I promised. Gary wants to know about CX. I didn't have a chance to do it yesterday. What I was going to say, I don't see anything yet. This has the Mexican cement company. We've had this periodically as one of the low-price screamers, and every time, this is... In this particular point, you need to hear something about infrastructure, and then boom, Mexican cement company, CMAX SA, trading CX is the symbol at 6.75, down 7 cents, really moves. Gary, I'm just going to say, hold off for now. It's on my, it's on my list. It's always on my list. I want to see if it does a little retest, and then if there's going to be any news whatsoever about infrastructure that really, I don't want to see. Stock market wise, I'm not talking about morality, I'm not talking about anything else, I'm not talking about conscience or whatever. The humanitarian side, yes, it is important, but infrastructure for throughout the Trump thing, we kept hearing about, infrastructure. Well, let me tell you something. I'll see it when I believe it. And how much goes to real infrastructure is going to be really important. As I say, I'm only talking stock market wise. There are other things you can talk about, and that's absolutely legitimate. But here I'm saying, if there's going to be a bill that's passed, I want to see this time what actually goes to infrastructure. We were talking yesterday about VMC. I hope that's VMC. That's real infrastructure. That is Vulcan Materials, crushed stone, gravel, asphalt, concrete. Yep, that's infrastructure. Got this double top. That's the double top I'm thinking might happen here, and other things. Could even happen in crude oil. We'll see. We'll have to see. But in the meantime, back at the ranch, 193.96 was the high back in August, plummets to 166.30 points. It's what, a 15 or more, it's more, 18% pullback, and then rallies back to only a peak E. I don't like a peak D or an E underneath the previous high. I want to see it power through in leg C. So this says be careful. There could be a stalling motion here, but keep it on your list. VMC, as you remember, that was one that we were looking at yesterday. Had questions about it, and together with a PFE, I did that. Let me just find my whole story here. Yeah, so I can get that back. Yeah, I don't want to take time right now, other than to say this fits in that category with the CMAX, same thing, Vulcan materials. Yeah, just keep it on your list for a little later on. If it pulls back to about the 184.82 area, let's have a look at it again. So that's the same thing with CMAX. If it, I don't even want to give a price because it's really hard to say. 6.49 was double hit low on the 11th and 12th of October, and then it pops up to 727. You know, that's a huge percentage gain. Then it comes back. That's a huge percentage loss. So just keep it on your list, but I just don't think it's just yet. Let me see questions. I don't. Let me do next one. Traded variable long and short. Let's say. Okay. Let's see. I did that. I'm just looking to see questions that have come up here in Tiger YouTube, and I'm going to get. Let's see. Can we get your 10-year yields? Yeah. Good point, Pat. Okay, so the point here is being made about the yields. So let me just show you something here. I'm going to go to the TNX dollar, TNX.X, and there's your D. There's your peak D right there in the 10-year yield. It made this F/C. Remember, I always say there are times where it's really important to just keep in mind that there's a chance of a parallel count. It shouldn't change anything as long as the 9 period is sharply above the 14. You can keep it in a buy mode. And now I can only put a plus sign because the day is young. But there's a chance, and it's gone to a peak C in a leg C, maybe a peak C in the weekly chart, not yet a leg C in the monthly. So this just says watch this closely because this is the yield. In other words, this plus sign should have been, I didn't put it in. I talked about it, but I forgot to put it in. A down arrow, and this peak A was an up arrow. And now all of a sudden you've got peak A, B, C, and you've got yourself a D, and that says yields could now trade sideways. Let's see how it's affecting HGX. That's the Philadelphia Housing Index. What is this? Peak. Grab the lowest low. That's the whole objective in this particular pattern. We had a peak E high around almost at 500. Did the arch formation, that dreaded H pattern, broke down, keeps coming down. Trough A. So you have to go to the next one there. Trough A. Yep, that's P. Trough B. Trough C. Trough D. Trough E. Trough F. And that stops at about just on 440. And then all of a sudden, what do? We get an up arrow because the stochastic turns up, MACD turns up. On balance volume turns up, the 9 period crosses over the 14 period moving average. So this becomes peak A, peak B, peak C, and a peak D, a leg D. So we're at a leg D in the yield, in the Philadelphia Housing Sector Index. Let's see what happens after this, and it's pulled back intraday from 483 down to 475. It's still up 5. So let's watch this one closely. All right, that's good. I think you're covering almost everything that I wanted to do yesterday. Couple of things that I wanted to look at here independently. I wrote them down. Let me just have a look. Futu, got a question about Futu. Futu, now this is going to be very interesting. Futu is Futu Holdings. It's a Chinese company. And it made a peak D. How many Ds have you seen, huh? Peak D again in the daily chart after tumbling down from the peak F doji candle high around about the 29th of June at the peak F 180 level, and it tumbles down, and it goes all the way to 59-ish. and then it goes peak A. And remember, in the Chapman wave methodology, watch out, because when an arch formation fails at a peak A or a peak B and starts to come down, that could turn into a dreaded H. Yes, you got your peak D there. That's very unusual, but it's still right at the 200-period moving average. I'd be real careful right now. It's at 67, down 21 cents. FUTU, Futu Holdings. I'll be right back. Basil Chapman, last segment coming up. Got a couple of questions still to answer. I'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So yes, a question about Mondelez. I could never get used to that name. Anyway, it's called Mondelez. It's just for foods. I mean, that's the whole thing. So anyway, Mondelez is trading at now. There's Mondelez International Inc. CL. It used to be, what did they change their name from? Was that Philip Morris? The other part of Philip Morris? Anyway, so it's at a peak C, a leg C, maybe a peak C today, but it's really struggling. The question was, is this part of they make Oreos? Okay, well, that could tell you the whole story. Let's see. So the question is, Basil, with the supply chain issues, does that mean that turbulence for MDLZ, Heinz, General Mills, Hershey, etc.? Oh, I haven't notated General Mills for a long time. GIS. Each one's different, but General Mills is in the same category by trading in the range, but not breaking down. It's holding a little bit better. So I suspect it's what they've got in the supply chain as well as other issues. I'm just going to do Mondelez for now. That was the question. What I'd said is that Mondelez really needs to trade in the 61.70 to 62.50 upside. It needs an upside close in that area. Then I'm going to say to you, Now it could start to make very gentle higher highs and higher lows. But at this particular point, it's just kind of stuck in a range. So a couple of things I want to, SKLZ, I got that updated. Had a question yesterday about it. I didn't get to it. I'm sorry. Or it was 2 days ago. This SkillZ esports mobile gaming platform enables social competitions. I think this is starting to look way better. It's $11.13. The person who has it, I asked me, is in it. I believe if you're in it, just make sure that you're comfortable with the stop that you have. I would just give it another 3 to 4 sessions by Tuesday of next week, Monday, Tuesday. If this is not taken out 1020 to 990 as key support, but in fact actually makes a leg C, I think this is in play in this environment, so keep it in mind. Folks, you've got Larry Pesavento coming up. We're going to see whether or not we make a peak D today in the Dow, we make a peak C in the S&P and the Qs, and then we get that one pop-up in the S&P and the Qs to make that leg D. Then I think we've got to be careful. We've got some crude oil. We're doing a whole bunch of things. This is really important. Yield substitute back. Should be great shows today. Larry, you've got Thinkorswim,